All right, traders, welcome to today's recap. This is Christian from Hertz, Tribeca Trade Group, and today is Monday, September 19th, excuse me. Welcome to the new week. We've got a big week ahead of us. We've got, of course, FOMC on Wednesday. You're going to hear nonstop talk about that. So I won't burden you with all that talk. I'll let the talking heads discuss that. The one thing I will say about that, and then we'll go on to today's price action. We'll go over some charts is, how much of this at this point, when you look at Fed fund futures pricing, what I was kind of trying to express earlier is that, the CPI report last week has really moved the assumptions pretty decently from where they were a couple of weeks ago. So, the market has done the dirty work for Powell. I think at this point, my guess is, and I don't have a crystal ball and I don't know for sure how the markets are going to react after FOMC, but I think a lot of bad news is priced in. Josh Brown, I was just listening to Josh Brown on CNBC, and he was thinking that when the markets rally, he says that the market doesn't believe that that Powell is going to do this. I think it does believe. We've seen downside action last week. It's the question of, I think, is it already priced in? Is the damage already priced into the market? That's what I think, that we've already priced in a lot of negatives. And, we're expecting, based on what the rate is implying, once you get to the end of the year, we're basically about 4.2%, which is another 1.7%, from where we are right here. All right, I apologize. I had to stop the video there for a second to take a phone call. But as I was saying, there's a lot that's already priced in here. So the question is, when you have one of these Fed meetings, is what is the new information that is going to be given, right? Is it going to be more hawkish than what is already priced into the market? Or is it going to be somewhat backpedaling a little bit? So we don't know. Let's let Powell speak. And I think the positioning right now and what the market is doing, I think that there's a lot of bad news priced in. Now, that doesn't mean that we go, running into the market just because there's a lot of bad news priced in. I think from there, we kind of realize what kind of situation that we're in, right? We've been down pretty decently since getting rejected in here. We have taken out a downside level, right? And, again, when you see something like this, when the lows are taken out from the previous pivot, people rush in and they're like, hey, okay, we're going back to the lows. Notice, using volume at price, using the market webs indicator, which, really gives me some good signals. But we came in here on Friday and we took out this version point of control, something that was left behind on 9.6 and 9.7 that I thought was just odd that that we didn't get down there enough to take this out. Now that we've taken this out, we've got kind of two hammer bars in a row. So the next thing would be, right, for a little bit of buying the dip ahead of the Fed meeting, is for us to get above the 5-period moving average, right? That's why I have them on my charts. It gives me a sense of the short-term trend. 5, 20, 50, we're back below all these, right? And we could continue to see this, right? Just back and forth, back and forth. Now, another thing that's possible is we could come up here, right, into the 20-day moving average, and it could be a place that shorts want to get more involved, right? Because if you look at this pattern a little bit, now we did make a higher low here, but lower high, so that's the pattern that we're in right now. So even if we move up to the 20-day moving average, right, and if you've bought the dip in here, it probably, for me, will be a place to kind of lighten up on risk a little bit. Okay, so that's what I see. There was one other area too that we didn't get down to. Now, again, I don't know if we're leaving it for later, but if, as long as we're above 38, this 38.61 level, right, we don't have to worry about this downside VPOC at 38.37, which, by the way, there's nothing really below this. Okay, so I was actually hoping that this was going to get taken out today, right, and then maybe we see a little bit of a bounce, but we didn't. And again, with the value areas, when price is inside value, you don't really have to worry much about what's outside the value area, right? When you're below, right, and you're in price discovery, then you do have to watch out for where these version point of controls lurk. Okay, so we're back inside value now for the week. All right, so that's quick S&P. I just wanted to go over NASDAQ too, right? NASDAQ, and we'll do this backwards because I'm already on the 1 hour chart, but notice that we, on Friday, we took out, it was either Friday or Thursday. We took out this virgin point of control in the 1 hour, and we have not gone below it, right? The value area low for the week, which again is based on last week's price and volume, is 11,799, and we have not, we did not violate that today. We did not go lower. Okay, so that's where we are as well. You know, kind of same thing here as the S&P with 2 hammer bars, but we're not above the 5-period moving average here either. So, you know, again, you know, need a little bit more follow through for that to take place. For now, very simply, the short-term trends are lower. All right, so let's get back to looking at, we'll go over some single stocks. Before I do that, just wanted to talk about a couple things here. Bonds, wow, they still cannot get over the 5-period moving average. So again, you know, this was nice to see a comeback. I think TL2 is actually up today, but not up much, right? And that can't get over the now that's taken out 2 of these downside VPOCs, but you have no confirmation yet that buyers are back in control in bonds, right? And especially when you go back to this, right? You know, we've come out and we've basically you know, taken out this low, but we haven't really done it with you know, much volatility here. So you know, I think this will be important to watch, right? How many more days, you know, can we see actually a rally in bonds, right? That's also something to watch. If we see a rally in bonds, how is that going to affect equities? Probably pretty positively at this point. So we'll see. You know, that's another thing too. If there is no rally heading into, if there's no rally in bonds heading into Wednesday's Fed meeting, right? Perhaps we might see an oversold rally on the back of something that is said at this point, okay? Because we're getting pretty oversold. It's a 28 RSI on the daily chart for the 30-year bond futures. All right, so again, something very interesting to watch unfold here. Bonds, sorry, not bonds. The US dollar was higher to start the day, gave back some of those gains, but still, trend is up here and above the 5-day moving average. I know some of these candles don't look so bullish, but I go by the trend more than anything else. And right now, the US dollar is still above all short-term moving averages. All right, so there's your quick macro review and some of the things that I'm watching. Maybe just throwing crude and nat gas in here. I'll tell you, crude was down like 3% today. It came back. Every time I think that this crude is going to break down, it comes back. It did get rejected here at the bottom of value. It isn't now in a downtrend. I hate to say that for energy bulls, but crude is in a downtrend, right? How do I define uptrend, downtrend? 200-day moving average, as well as you can look at the 50-day moving average. You can look at all the moving averages. Crude is below all the moving averages and below value. So if for now, crude is in a downtrend. All right, what about nat gas? Now, nat gas, same thing here, guys, except it is above the 200-day moving average. So nat gas is still in an uptrend, but it's kind of hanging by a thread. It did take out this lower VPOC. Again, just missed taking it out back on 9.7, 9.8. Didn't do it, but really nice reversal hammer bar today. Let's see if we get some follow through from it. Okay. All right. So that's a couple other things to watch. In terms of stocks, took a long time for me to get here, but yes, stocks. This is one of the weekend watch list names. We talked about this name last week, right? Tesla was showing some nice, again, relative strength. The overall, if in case you forgot, the market went down last week. Tesla did not. All right. So Tesla's showing some relative strength. This is the first close above the value area for September. Now, again, it's very close. You know, it got over by a couple bucks. I am long Tesla, by the way. All right. Here's my trading blotter. You could see, you know, I just said I was watching this all last week when it was trading around 302, 303. So I did pull the trigger today. You know, I just said, hey, I can't just keep watching this thing. I got to have some skin in the game. So I did put on a swing trade in Tesla today. Again, not a huge trade, just to get involved a little bit. Technical signals, I'm going to go by them, right? I know that we've got a tough week this week, but hey, I want to honor, sometimes it's better to be, right, to look at the chart and, you know, basically just go on the signals. All right. A couple other things that I did today, and then we'll go over some more charts. But, you know, I like the strength that we saw last week and the casino names, right? Both Las Vegas Sands. Now that did not close, it closed right at the top of value, and Win was just a day trade for me because we did see some call buyers early on in the day. It was fine. It was a small winner, not that big of a deal. It did run into some resistance at 67.88. A couple other, you know, areas that I thought were super strong. The lithium names have come back, right? Even though that there was a little bit of weakness last week, kind of came back in and never broke the trend, right? Came in and touched the 20-day moving average. Same thing with ALB. SQM is another name. I actually did get long some SQM today. I like SQM that it's not just lithium. It's also a play on ag, right? Agriculture. And those names had a pretty good day today. So maybe those names are going to start moving back up a bit. Nevertheless, I like having some exposure to both areas of the market in terms of both agriculture and lithium. All right. And then the cyber names were strong too. You know, you go back to just a week or so ago and Zscaler had these great earnings, popped on earnings, rallied a little bit more, right? And then stalled out when the market was weak, right? It had a nice day today, up 3%. There was some call buying, just weekly calls that went up. Watch this 174.80 tomorrow. It did not close above value, but if it does, this would be a nice little move here, right? Nice little dip buy. If you saw my note earlier today, which I sent out earlier publicly, so you could find some of the setups. And again, I talked about Zscaler. FCX is another one. I mean, the metals and minings really came back strong today, up 3.8% today. Remember, this whole group got hit very hard on Nucor last week, right? And you know, this name was up today, but not as much as some of the other names. Up 1.5% today. There was a decent size call buyer in FCX. There's a story out there about how China controls a lot of the copper, and I don't know much more about it. I think there's some conspiracy theories out there, but you know, there was the name that I saw, or the trade that I saw, was kind of the best way I think to play when you've got a story out there and you don't know if it's true or not. Options are a good way to play it. So somebody bought 7,000 of the November 35 calls for $1.17. Like, that would kind of be the right way, I think, if you wanted to give something a shot on a complete conspiracy theory. You know, you could only lose the premium. And if you size it appropriately, you know, you're controlling your risk. All right. A couple other names as well. We talked about Zscaler, also cyber. Right. I think that the cyber names, you know, could have something to them. Of course, they're not a cheap group, but you know, I would watch the CyberArk software as well. You know, this is pretty bunched up here as well. Watch to see if this can break 155. Right. All these things going on with Russia, China. I think cyber is going to be in demand for a while to come. All right. CEG. Right. This is there was a headline out about CEG after the close. Keep in mind, everybody's been loving these uranium plays, right? Right, like the CCJ and URA. This has done so much better, right? This actually runs nuclear plants, right? So they said that they ran near 100% this summer capacity, right? So their power generation, right? So this has been such a better way. You know, sometimes the popular trade, right? Everybody looking at CCJ every time there's call buyers on the tape. This has been the trade, right? This thing has gone up from 62 to 89, right? If you looked at the uranium chart, right, that's not been the trade, you know, even though that's where the popular thought has been. All right. So again, if you've been doing your own research, right, and you know, we found CEJ just by basically going through and seeing that really strong earnings report that they had, and then watching the new high list, right? That name came up, so we learned about this company. I actually traded this back in here. I did see calls back in here, and that's the first time I found this company, CEG, and it made a nice move from 54 to 62. I made money on this. I kind of forgot about it for a couple months until it had earnings, and it popped on earnings and just kept going, right? Again, it's a lot of times what we see. All right. And last name, Aspen. This is a name that we put in the TTG trend portfolio. Software name, right? Out to new highs. How about that? All right. So there is some strength in this market. You just, in my opinion, again, I'm not giving out any advice or anything like that in this video. By the way, please go ahead and like it and subscribe to my YouTube channel. And I appreciate that. But I'm not giving out any advice. I'm just basically saying, don't go full doom and gloom right now. There are some things that are looking pretty decent. Again, you have to be selective and you have to be a risk manager first in this market. And we'll get through this year. All right, guys, have a great night. See you tomorrow.